Good morning. I'm Matt Driskill, editor of Asian Aviation Magazine and AsianAviation.com. Welcome to the latest In Conversation, sponsored by Metrojet of Hong Kong. Today we are speaking with Mabel Kwan. She's a managing director at Alton Aviation Consultancy. She is based in Singapore. Mabel, welcome to the show.
Thanks, Matt. Very happy to be back here again and really look forward to a lively exchange of views.
Yeah, it's been a while since we last spoke, and I had sent you some notes about the show and everything. The AAPA recently said that Asia Pacific carriers 7.3 billion in combined net profits for 2024. Passenger growth is strong. Cargo recovered a little bit. But, and there's always a but, as I always say, the world, as you know, and I know, and everyone in the world knows, it's a bit chaotic right now. Supply chains are constrained. Costs are not going down anytime soon. What are you seeing at Alton for Asian Airlines specifically? Is there a big positive that's out there now? And what should Asian carriers be on the lookout for?
Big crystal ball there, Matt. I think the last time we spoke, the industry was still reeling, right, from the effects of COVID. I think if you fast forward 2 years, and COVID is clearly behind us. I think revenge travel is normalizing to long-term trends. It's underpinned now by macroeconomic factors. I think RPK growth globally is going to be in the mid-single digits. It is a drop from the double-digit COVID recovery-driven growth that you observed in the last few years. I think Elton expects Asia Pacific to remain the largest market for air travel in the next decade, with an anticipated growth rate of about 5.1% per annum to 2034. This is driven primarily by, the long-term demand from India and China, and of course, a growing middle-class population in the wider region. This is higher than what we think the world average growth trend will be. So clearly, Asia Pac will still remain one of the key drivers of aviation growth. Airlines are also clearly looking ahead and positioning for growth, right? They are looking at new fleet orders. For example, Malaysia was ordering about 50, Vietjet about 100. They are looking at diversifying revenue streams. They're looking at strengthening supply chains and increasing efficiency of core operations through very much collaborative decision making and technology. But, as I mentioned earlier, a moderation of growth rate from the COVID recovery rates that we observed in the last couple of years is expected, and there are, of course, threats to the outlook. The world, as you know, is likely to become more volatile, not less. We do see, if you've lived long enough, like the both of us, we've observed that a lot of the cycles between disruptions are getting more unpredictable and actually shorter. You see the Gulf War, the Asian financial crisis, September 11th, SARS, MERS, and you see that now geopolitical developments are adding to these volatilities, with tariffs, trade wars. So I think, rather than airlines trying to crystal ball when the next disruption will be, they are probably better off strengthening their resilience to deal with the next crisis, and especially in the areas of, business, financial, technology, operational, and organizational resilience.
Yeah, you were talking about ancillary services a little bit. You touched on it just a little bit there. And I mean, actually, my question was 7.3 billion. It sounds like a big figure, but when you consider how many airlines there are in Asia Pacific, it doesn't seem that big, actually. And I remember I can't remember what conference it was, but someone said that every airline in the world is a hamburger and a Coke away from losing money, from losing money on a per passenger basis because the margins are so thin. Uh, do you see airlines in Asia improving their margins in any way, or are we going to see more things like charging extra for checked baggage, things like that, even with legacy carriers?
Mm. I think if you look at, the cost structure of airlines, it is not enviable because almost 40% of the costs are outside of its direct control. So you have things like fuel price, you have things like airport charges, and even more if you consider costs that are actually related or affected by inflation. So IATA predicts global airlines net profit margin to be 3.7%, and it's really razor thin, as you said. While the exact cost composition across the line items may differ between regions, the narrative for Asian airlines is similar. And in fact, the projected net profit per passenger is even lower at sub 2%. Right. A substantial proportion of Asian airlines costs are also denominated in hard currencies. So, you do have a little bit of imbalance between the revenue and the cost exposure from a currency perspective as well. And if local currencies weaken, then it disadvantages Asian airlines even more. So, yield management and optimization through ancillary revenues are definitely here to stay, and there are just some ways within airlines' control to improve their profitability. I think previously, some of these are really toolkits for low-cost carriers, right? You're charging for seats, choices, charging for extra leg room. But actually, these are now being adopted by full-service carriers as well, with higher pricing for so-called frills, such as, seat choices. I think the average ancillary revenue growth is set to outstrip the core passenger revenue growth in 2025. And in some cases, I think it contributes as much as 20% of airlines' revenue. Increasingly, I think, this is also used by full service carriers as a way to differentiate the product for their most loyal and premium customers. So, for example, if you have a status on a particular airline, when you do the booking, you get free seat choices, or you can get an upgrade to premium economy, for example, right? So these are just some ways in which they can continue to differentiate the product for their loyal and premium customers by having a perception that's free for them.
Yeah, I remember, and you mentioned that there was something that I think it was IATA came out with their Watts report where they were showing premium cabins were really showing a big increase. So that's interesting. You talked about fuel price, and that was my next question. It's up 4.8% according to AAPA. And it's always talked to people about this in the industry. SAF, sustainable aviation fuel, it's not cheaper than regular fuel. And everybody talks about sustainability. We're going green. We're going to do this. We're going to meet the net targets by, first it was 2035. Now it's 2050 to be net zero. We still got tensions in the Middle East. OPEC is a little bit more calm, but then you got Russia and so on and so forth. And I don't see the industry even by 2050. It's not going to be net zero, in my opinion. I'm cynical about it. Everybody wants it, but nobody wants to pay for it. And governments don't seem to be coughing up incentives for airlines or producers of fuel to make it. And so everybody talks about it. Oh, we're doing this, we're doing that. We signed a memorandum of understanding, which is a lot different from actually buying fuel.
Mhm.
So, what's going to happen with SAF? I mean, like I said, everybody wants it, they just don't want to pay for it.
That's a big topic on fuel that you want to dwell on. I think if you and I can predict oil price, I think we will be billionaires by now. And unfortunately, oil prices have always historically been very much driven by external events and sentiments. If you recall, went from 20 to 120 within 2 years, right? It's very much unpredictable because now with war risks, with geopolitical posturing, there are too many sentiments driven and external events driven factors that is very hard for even airlines to predict. So they do have hedging as a risk mitigation tool, but of course it's unrealistic to have 100% protection, right? You had a very interesting topic on SAF, and I think we've mentioned this before. I do think that aircraft technology and new energy sources, no matter how skeptical you are about SAF, will be the most transformative in the industry's sustainability ambitions because these will account for, I think, slightly more than half, right, of the energy reductions required to achieve the net zero 2050 targets. However, you and I know that despite technological advancements in sustainability and in aircraft technology, that any clean sheet aircraft design is only expected to be implemented by the 2030s at the earliest, right? There are current limitations to hydrogen and electrification achieving commercial scale. I think SAF is a drop-in fuel. It's the most immediate solution to plug the gap, albeit it's still inadequate.
Yep.
And I think the to me, there's no silver bullet, right, for any of these new energy sources. You have to pre-prepare, right, for a multi-pronged approach with SAF, hydrogen, electrification, each playing a role. And yes, SAF is definitely more expensive than jet fuel. And with most of these new industries, governments, multilaterals, policies will have to play a big role in encouraging the development. But then lies the catch-22 situation, as you correctly pointed out. Airports and airlines are actually very cautious, right, about passing through the full costs to passengers, and rightfully so because there is an impact on the airports and the base carriers' competitiveness because there's no universal guideline on decarbonation, no universal guideline on SAF uptakes or the pricing of carbon credits. So it means that if, there is now not a level playing field in that sense, and airlines, of course, are very cautious, right, about, the impact on their own competitiveness if they fully embrace some of these, sustainability initiatives.
Well, nobody wants to pay for it, and nobody wants to be first, so they don't want to set the precedent of paying
Yeah.
for it. Anyway, we got to move on a little bit. We're limited on time. You knew I was going to ask these questions, so the last two questions before we take a break. Trump, tariffs, all the uncertainty and everything. Global Business Travel Association came out, talked about up to 1.57 trillion with a T in 2025. Uh, but that that's just 6.6% above last year's growth. Trade tensions, and you and I have both seen the reports. People are putting off, they're not going to do meetings in the US. They're going to go to Europe, they're going to go to Asia, something like that. You know, Little League baseball teams are being denied visas to go play in the US, things like that. It's again the trade policies or the uncertainty surrounding the trade policies is hurting everybody in the travel value chain, not just airlines, but hotels, rental car companies, restaurants, all of that. Do you see that happening? Do you see travel going into the U.S. reduced because of the uncertainty?
Yeah, I think you're spot on that, a lot of the impact of the tariffs is economic uncertainty because, what has been any semblance of economic or policy playbook is now disrupted. And if you're a bit stronger about it, it's torn apart. But actually, a lot of the volatility is also driven by sentiments. Businesses and individuals alike unsure about the impact and the next policy direction are hesitating to spend, right? They're hesitating to spend on longer term investments, reduced willingness to spend, given an uncertain outlook. And that obviously has a big impact on just general economic growth, right? Reduction in consumer spend, reduction in investment, and reduction in industrial activity and exports all drive towards lower economic growth. And given that air passenger and cargo demand have always been very closely related, right, with economic growth and development, demand-triggered global recession will definitely have an impact on both passenger and cargo demand, especially given, air cargo's dependence on trade activities. I think it's also interesting to look at sort of the supply side of the situation. Aerospace companies, right? How are they dealing with some of these, tariffs and uncertainty around the supply chain? They will have to make strategic shifts to try and minimize the impact of tariffs. For international suppliers importing US goods, they might have to look for clever alternatives in jurisdictions that are unaffected by any tit for tat tariffs. For foreign companies exporting to the US, you know, relocating supply chains to US is one option, but it is a very long-term measure. There's a lot of money involved, a lot of time and resources involved. And so this will take time, right? There will be a period in which this uncertainty continues to be the main dominant factor and force, impacting the industry. But I think ultimately the scale and the duration of it, the impact will really depend on which scenarios play out, right? I think, when the tariffs were first announced, people were speculating, is this an opening position? And therefore tariff levels will be negotiated down eventually. If countries will retaliate similarly on US products, right? Or if there were certain exemptions for raw materials that are critical to the US manufacturing. At this point in time, I think there is it's not fully clear yet, but it seems like an all-out tariff war will be avoided. Negotiations are also underway, and final tariff levels seem to be, at a more reasonable or lower level than initially anticipated or announced. The aerospace industry also is spared the full brunt of the tariffs because some of the aerospace parts and actually the supplies are exempted from some of the tariffs. So the devil's in the details, and we really still, have to wait and see.
Well, that's the details. That's one of the things I wanted to ask you too, is because you've got lessors like Avalon, BOC Aviation, you got manufacturers, Boeing, Embraer, Airbus, and even COMAC, which is heavily reliant on Western parts, avionics, wheels, brakes, all kinds of things like that. And, one day GE says, okay, we can still sell engines to China. And then the next day, well, no, we can't because it contains such and such a part. And again, if I'm running a multi-billion dollar business, which would be a huge mistake, probably given my math skills, but it's just the uncertainty. I can't, if you're an engine maker, if you're a wheel maker, a brake maker, or something like that, these things are planned out years in advance. And where are we going to put the shop? Do we need a final assembly line in China? Do we need one in Vietnam? Do we need one in India? Again, it's the uncertainty. I mean, it seems like it's not a good time to be a hardware builder like Airbus or Boeing or COMAC.
Yeah, it is not a good time. I think, but that's that you correctly pointed out is the uncertainty, right? I think just this morning I read the news that Nvidia and are allowed to export some of the critical chips to China now, right, for the manufacturing. So I think policies change, and people just need to sort of have alternatives, but at the same time, be prepared to pivot and repivot, right, as the policy changes. Unfortunately, the volatility is going to be there, as I mentioned earlier. Uh, you know, besides say Chinese manufacturers, COMAC, actually they do, of course, rely on a global supply chain for its major components, right, such as engine, landing gear, avionics. But similarly, right, for just like the other manufacturers, actually the US manufacturers also rely on a global supply chain. And so there will be some notion of practicality that should come into play when some of these policy are enforced. Because one of the direct benefits from having a global supply chain is, of course, the ease of certification, right? So because many of the products share similar design as those already certified, right, and installed on global platforms, it is reasonable and it's not easy, right, to start bifurcating some of the standards around these parts and supplies. So whilst even prior to the tariffs being announced, there were already some decoupling effect that's in place. I think after COVID, some countries also realized that they need to have a more diversified supply chain. And so they are starting to regionalize and localize some of their supplies. And this will continue, right? Because it's just a risk mitigation measure. But at the same time, the overall like manufacturing aerospace industry is so globally integrated that it will take years to really have a bifurcation.
Okay. Maybe we need to take a quick break here. We're going to hear from our sponsor, Metrojet of Hong Kong. We'll be right back after this.
We're going to have the crown jewels of Asia, and I promise you, we're going to have the nicest and busiest business aviation hangar in the region.
And we're back. We're talking with Mabel Kwan at Alton Aviation Consultancy. Mabel, we touched on China a little bit before the break and COMAC as well. Obviously, China is still buying Western planes, Airbus, Boeing. I guess, it seems like Cathay announced a Boeing order the other day. So China is trying to cozy up to Trump a little bit to maybe mitigate the tariffs a little bit. But COMAC, I'm interested in because I was watching CNBC the other day and they had a big story on COMAC. Uh, is there a time when COMAC is going to be able to compete against Boeing, Airbus, or even Embraer? Uh, they need to get their MRO network in place. They need to, get their supply chains sorted out and like everyone else. But what is it going to take for COMAC to actually step up and be a player, kind of like they are in the auto industry with electric vehicles and things like that? So, they've got the capability of it, but they've got to get certified in Europe. They've got to get certified in the US. Will the day come in the not too distant future, and I'm talking, say 3 years, that COMAC would be certified?
I I think if you look at the history of COMAC, right, they actually began the ARJ program about 2 decades ago. And so they've since started to set up its commercial aircraft R&D team and manufacturing supply chain. But they also built up the capability of design and manufacturing, which obviously now still only meets the CAC airworthiness regulation. But it's worth noting that it's still largely aligned, right, with other major civil aviation authorities. Now, following that, COMAC then went on to launch the C919 program, and with that, they opted for more advanced technologies, including at that time, the most advanced LEAP engine, composite materials, wing technology. Uh, I think with the primary goal, right, which is to compete with the latest narrow body program that Airbus and Boeing are developing, um, they are now going one step further, right, which is really to build up some of its international capabilities. Now, just worth noting that currently all the major airlines have an order book for both the C909 and the C919 aircraft. And given Boeing and Airbus supply chain issues and delayed deliveries, a huge backlog as well, right? Up to 10 years for narrow bodies and maybe a little bit shorter for wide bodies. We expect the Chinese airlines to continue to demand and take deliveries of the COMAC aircraft. And based on the current production rate of the C919s, the domestic demand is sufficient to fill up their production rate for the next few years. And this gives COMAC, right, also the ability, right, to continue to improve on both the technology and production side, and gives us the experience it needs to compete, right, potentially internationally. But really, for COMAC to establish itself as a very much a credible player in the marketplace, it needs to target foreign buyers. And with regards to international business opportunities, COMAC is now focusing more on the Asia market, and very logically so, right? With its recent establishment of regional offices in Singapore and Hong Kong, and then as well as partnerships signed with some of the MRO providers like HEICO. And why Asia, especially Southeast Asia, because it's geographically closer. It is more aligned both, from an economic standpoint and as well as a, political relationship standpoint with China. And it continues to then allow COMAC, one step at a time to build up its regional customer network support outside of China, which is very key, right, for commercial aircraft operations, because the after-sales support is a huge consideration in some of the aircraft purchase decisions. Um, you also pointed out about certification from IASA and FAA. Yes, and this they are making steps to do that, and this is actually obviously needed to capture market share in some of the Western countries. They are targeting 2026 to obtain ISR certification. And if the operations in Asia, Southeast Asia is successful, this will help support the track record, right, for future sales and certification even outside of Asia. It did take Airbus. I think I mentioned this in the previous interview. It did take Airbus about 40 years to reach 50% market share. So whilst COMAC has several hurdles to cross before it can compete, at least head on internationally, it doesn't mean that it will need a similar time frame to catch up. If you draw a parallel, you mentioned, EV. If you really draw a parallel to the growth in EVs, I think both the talent and the government policies enabled it to really push and advance both within China and as well as outside of China.
Okay. We're going to go from the Chinese dragon to the Indian elephant. Air India seemed to be doing well until we had the crash of the Dreamliner recently. India itself as a country, I mean, I'm always amazed that as big as India is, as many people as it has, I don't understand why the aviation I mean, I do, it's government policies and everything, but the aviation sector should be really a lot more developed than I think it is. And some of the tax policies on MRO, things like that, don't really support growth in that sector. Excuse me. Um, what is India doing right to promote aviation, and what is India? Where does it need to improve?
Mm. Mm. I mean, obviously, a huge market and one with a large potential. I think we do see, India as the other engine of growth, besides China and Asia. India comes from a smaller base, as you correctly pointed out, but I think the growth rate is actually fairly high and strong. Um, MRO sector, yes, I think it has been neglected for a little while, but India is beginning to streamline some of the policies and programs, right, to encourage growth in that sector. I think it is critical, and they now recognize that, in order to grow an aviation hub, it's not really just the airport or the airline, but you need an entire ecosystem of supporting players, right, from MROs to logistics to cargo, or even training centers, because you do need that whole ecosystem to support and work and to work in order to really develop the hub. So from MRO side, I understand that I think local and state governments have put in place programs and initiatives to support the development of MRO expertise. What we understand is there are tax incentives, including on both corporate and import taxes, subsidies on training, utilities, and capital investment as well. So there are positive momentum that's put in place. We do see players within India on the MRO side, GMR, for example, having aspirations to grow its footprint. We also do see foreign players, coming in to expand into India in a bigger way. Yeah.
Okay. Moving on, we got our last two questions because we're running out of time. My cynicism is coming back out again. eVTOLs, air taxis, flying taxis, or I don't know how old you are, but I'm old enough to, on Saturday mornings, one of my favorite cartoons to watch was the Jetsons. You have to look it up, Google it, and you'll see what I mean. But they had a robot domestic helper, they had flying cars, they had all of this set in the future and all that. Embraer's, they spun off Eve Air Mobility. Boeing's involved, I think, with is it Joby or one of the others. Airbus actually pulled back a little bit on its development of advanced air mobility. And I really wish, and I'm telling this to the industry right now, pick an acronym. You've got urban air mobility, you've got UAVs, you've got advanced air mobility. Pick one acronym and stick with it, please. But let's say advanced air mobility. And I always ask people this. I mean, people are spending hundreds of millions of dollars on this sector. What's wrong with helicopters?
There's nothing wrong with helicopters, but
They
it's just
they
I
work.
think
They work. They're a known technology, and I think to me, air taxi or EV tolls, whatever, it's a solution in search of a problem.
have you tried an
No,
eVTOL?
I don't know that I'd want to get on one or not. Honestly, especially one without a pilot.
Ah, yes, I think you touch on a good point. Actually, I think the key difference is really on this. One key difference is on the sustainability front, because from an eVTOL's perspective, right, we're looking at electrification, and that's one of the ways, right, in which the industry is looking to achieve some of its sustainability targets as well. So it is a mode that supports the sustainability initiatives. But secondly, it's a multi-rotor and it's presumably safer than helicopters. So remains to be seen. Of course, I think that's an important point, right? Which is consumer confidence and consumer perceptions around safety, about the around the viability of this product. That would be one big hurdle to cross, right? To in terms of commercialization as well. But as with the commercial aviation industry, as with the jets, we actually need, right, an entire ecosystem approach. We need common framework. We need a common measurement matrix, right? In terms of, why why are we talking about the development of eVTOLs here? It needs guidelines, right? It needs a whole system and a whole ecosystem to work. And I think in this regard, right, you know, why do we think eVTOLs will not work? Because autonomous operations will be the game changer. And in order for that to happen, we need all this in place and the extension of current use cases for cargo, medical, inspections on drones to passenger operations will be the next stage that will revolutionize and evolutionize the industry.
Yeah, it'll be interesting. I don't think I'm 63, and I doubt I will see the day unless I live to be 100, which I don't really want to do. I doubt I'll see the day when these actually become the reality that everybody hopes they will, especially after spending all the money they're spending on it. Anyway, maybe we're running out of time. So last question, as you know, I like to end these conversations on a positive note. What's positive for the aviation industry in Asia, say for the next 6 months and next year? Get the old crystal ball out again.
I'm encouraged by actually the renewed focus on talent development, and maximizing productivity, in the industry, through automation, through digitalization, because, after COVID, where there was, I would say, exodus, right, of quite a lot of people who were formerly from the industry and then they've left the industry. There's actually a renewed focus on how to develop talent, how to retain talent, and also a focus now on, how do we solve some of the productivity issues through automation and recognizing that all these require collaboration among stakeholders. You do see a lot more airlines, top and airports coming together to have joint initiatives. So, for example, CAS, right, the Civil Aviation Authority of Singapore, has come up with blueprints for sustainability, right, that encourages, the various stakeholders within the industry to come together and prioritize, all right, and be able to focus resources into some of the more important and impactful initiatives. So putting the industry together. They have also launched, programs and as well as collaboration across Asia Pacific. So I think that recognition that you can do more together is actually important to the industry and will position the industry stronger for the future.
Okay. Mabel Kwan, the managing director at Alton Aviation Consultancy in Singapore. Thanks for joining me in conversation.
Great speaking with you, Matt, and thanks for having me.